$250 billion. That's what Nvidia is in talks to guarantee for a data center in Ohio it doesn't own. Reported in talks, not signed. A guarantee isn't an investment. Nobody hands over the money. It's a promise. If they can't pay, I'll pay. Costs nothing until the day it costs everything. Start with money that actually moved. In February, Nvidia put $30 billion into OpenAI. That's reported, not filed. We're quoting the reporting. In November 2025, Nvidia put up to $10 billion into Anthropic. Microsoft added up to $5 billion of its own. The $15 billion you may have seen is those two added together. So what do they do with the money? They buy chips, Nvidia's chips. Nvidia counts that as revenue. The seller is helping pay for the sale. That's the loop. How big is the whole thing? By some counts, more than $750 billion in Nvidia's own deals this year. Maybe over $800 billion once you add the rest. Nobody publishes one number. The deals overlap and much of it isn't public. That gap is the story. Now the building, a campus in Pike County, Ohio, 10 gigawatts. 10 gigawatts isn't a data center number, it's a grid number. At that size, power is the problem before computing is. Nvidia wouldn't own it. It's reported to be in talks to guarantee up to $250 billion against it. Not signed, still subject to change. Nvidia declined to comment. None of this comes out of pocket. AI is on track to borrow about $570 billion this year. By the end of May, $236 billion had already been raised, 4 times last year's pace. That's a Morgan Stanley forecast reported by Forbes. The note itself isn't public. Shares are a bet, debt is a bill. The bill arrives whether the demand did or not, and lenders have started pushing back on the price. Now the other side properly. The best argument for all this is simple. The chips are real, the money is real. The labs pay cash for hardware they install and run. A circle is a description, it isn't an accusation. In March, Jensen Huang said the $30 billion into OpenAI might be the last before it goes public. And the $10 billion into Anthropic would likely be the last too. If the investing stops and the buying carries on, the loop was a ladder, not a foundation. Here's what would change my mind. This only breaks if demand stops. Everything else is coming. The Bank for International Settlements put it carefully this year. They said the risks have grown and they list 4 things. One of them is whether AI investment is sustainable. One of 4, not a crash call. And note what they don't say, they never mention circular financing. Whatever you make of the loop, the money lands somewhere. Not just on chips, power stations and grid connections, transformers, cooling. The factories that make the chips, the banks that sell the debt. They get paid on the building whether the AI economics work or not. That's the difference between owning AI and owning one bet on it. This isn't a prediction. It's how the money moves and what has to stay true. Every number here has a source and a date. The ones we couldn't source, we said so. It's all on allfacts.ai, not financial advice.